Hello, it's the Oak Bloke here, and this video is covering Baillie Gifford Japan Trust BG, ticker BGFD. Right, so you can buy it for £7.59, you can sell it for £7.53. And what's in the middle is the spread. These guys are buying their shares back. I think if you've read my prior article, which I'm assuming you have, if you haven't, then read it. What I talk about here is just the scale at which they are buying those shares back, and I cover the top 10 holdings in this prior article. So today's article is really just an update on this was pretty much, as you can see here, this was the Q3 update, and now here we are in May, and pretty much all of the Q4 updates are through. Now Q4 in a lot of companies is March. Don't ask me why, whether that's some Japanese thing, but not exclusively. They're a little bit like in Britain, that you can have your month end at any month of the year, but a lot of them do seem to have 31st of March. So anyway, yeah, so we've got like another quarter of updates essentially. So that's what this article's covering. So I mean, let's start at the top. So this is the disclosure from Baillie Gifford. So they say they don't give you a lot of detail. They just pretty much say, here's the top 10. And the top 10 make up, I think it's 37.5. Yep, 37.5% of the fund. So we don't know what the other 62.5 might be, but apart from obviously back in the interim report, we knew what they were back then. But of course, things could have changed and so on. But what I have done in this article is just cover the updates on these 10, and because there was previous ones in the top 10, I've kind of had a little look at those as well. Everything that I've explained there is on this. I've basically put it into a chart. So I mean, let's just quickly sort of cover off a few things. So the exchange rate's 194 to the pound. What I've done is just look at the current income. So this is the net profit income per the latest report, and that's an annualized number. So what I'm doing there is basically just that's the Japanese billion yen number divided by E5 is basically turning it back into pounds. So this forecast income and this 17.29 billion pounds is kind of, that's what the top 12 are generating, and that's how much it would cost you to buy the top 12 if you went out and bought them. I'm not saying you should, but that's kind of perhaps a way of looking at the valuation of it, that what would cost you 307 billion pounds, obviously it's just spare change, would generate an income of 17.3 billion. Now, that in itself, that number there is that number. So that's the price earnings of the top 5, and then I think the price earnings on all of them. So that's taking that number there. Oh yes. So yeah, sorry. The other thing I do is here I'm stripping out cash. So I'm sort of looking at the cash piles that they all have, because these Japanese companies have got bucket loads of cash, and they're using that cash to buy back their shares in some cases and to expand their companies in other cases. So for me, like, quite a good way of looking at them is to look at the price earnings once you strip that cash out, and it's stupendous. I mean, to be buying the likes of Softbank, Sony, Sumitomo Trading, SBI Bank for 6.9 times price earnings. That's cheap. That's like the equivalent of, I mean, if we said it's kind of like the equivalent of that, which is like a 14.5% return. That's kind of the equivalent of a PE, a price earnings of 6.9. It would take you 6.9 years for those profits there, that's 17.3, plus the cash to equal the price of the shares. So that's cheap. I mean, obviously, if you disagree with that, valuation method, then what you would do is you would take that number and divide by that number, and that sorry, other way around. You would take that number, divide by that number, and instead you'd get a PE of 17.8 times, which obviously is a very different number. And you might say, well, that's actually quite fairly valued. And but I think based upon the fact that these companies are engaging in share buybacks, they are engaging in dividends, so that cash is making its way to shareholders. That that just shows you the difference in valuation depending on whether you do or don't include the cash that they contain. And you can see it here. I mean, the you know Softbank, for example, or Rakuten have got like nearly between them, they've got nearly 60 billion of cash. Companies that you could buy. Look at this. You could buy them for not far off, well, 66 billion, and they're virtually all made of cash. That's just an incredible number. And obviously, these pictures are constantly changing, so it's not sort of necessarily the case that cash is always 100% available. But anyway, let's get into the. I mean, as you can see over here, I've then looked at their NAV, so that's the shareholders' equity. Again, I've turned that into pounds and pence, or pounds anyway. So you're getting 238.9 billion pounds worth of stuff that you're paying 307 for now. Obviously, with net asset values, for example, Sony, you're never going to have the the price of the share is never going to just be equal to the price of the book value of the assets, because obviously the brand name and the customer relationships and all those things don't reflect in the account. So you can't, the fact that this is only what 1.3 times the book value, 1.3 times for these sorts of companies is really, really cheap in my opinion. And as you can see, some of them are actually below book value. So if, for example, with Softbank, you're actually buying that at a 56% discount to its NAV. And when you consider that it's got things like Deutsche Telekom and T-Mobile and ARM chips, there's some pretty interesting holdings, and we'll talk about those. In fact, let's whiz through some of these. So I say here, the SoftBank CEO has appeared with Donald Trump a number of times. He's working on a project called Starlight. So Starlight is a AI project in conjunction with OpenAI. It's also so this slide from their presentation deck kind of this sums up SoftBank quite well. That you've got various chip microprocessor companies, semiconductor chips. These are sort of generally designers as opposed to manufacturers, but these guys, Graphcore, were bought about a year or so ago, and the key reason to buy them was that they kind of have a similar technology in some ways to NVIDIA. So it's like chips for data centers. It's been called an IPU, an intelligent processing unit, as opposed to using a graphical processing unit. So been bought for a song. The people they bought it from were people like Molten Ventures, which is also videos about that. So putting my Molten Ventures hat on, yippee, GraphCore that was valued or predicted to potentially be worth zero or to be, just complete dud, has now suddenly been sold for a premium to its NAV. Obviously, the NAV had been written down by a great deal, but from a SoftBank point of view, they've bought it for a song. They've got, Graphical's got over 1,000 patents. It's got some very interesting technology. So actually, when you combine it with ARM, and ARM's extensively used across, the Mag 7, so Google, Microsoft, NVIDIA are all working and using ARM designs. So basically, if they use an ARM design, the ARM gets a royalty, is how that works. And this, just a couple of months ago, they've bought Ampere, which again is a design, so designing AI chips. So there's basically an alignment going on in SoftBank to cluster together shares into robotics, into energy, data centers, and so on. Bear with me. The dog. So anyway, that's SoftBank. Um, it leaps to profit. Now it's an interesting one, and I've been going through the accounts to get my head around the fact that here we can see that particularly this color here is ARM. So the valuation of ARM has dropped. That's the dog. Yes. So that's dropped. So a drop in NAV shouldn't generate an overall profit. It should generate a loss. But the profit, we're told, was £6 billion, or equivalent in yen. So that actually puts it on a price earnings of less than 10 times. And the price earnings growth is 0.02, which is fantastic. Really strong growth. But of course, this has dropped from a much higher NAV to a lower NAV. Anyway, buried away, there was a little footnote that said that the consolidated value of ARM and is not recorded in the consolidated statement of profit and loss. So bit strange, but that's and obviously pro forma means post period. Post period ARM is back up, so we can see there's an increase of what, 2 trillion yen, nearly 2 trillion yen post period. So and back here, going back 20-25 years, I mean, obviously you can see a vast increase at SoftBank. And obviously some periods of trouble. Obviously this was COVID here, so 2022 was a bad, 2021, 2022 was bad years. But this orangey bit is Alibaba. So Alibaba is still held by SoftBank, but they've got, again, a very complicated setup where they've got an asset of an ownership in Alibaba offset by hedges that contra Alibaba. So I think this absence of orange, again, when you actually look at the numbers, look at the accounts, Alibaba's very much present in and in there. So if we took, let's go back to this. So if we took the just sort of type in Baba, you can see Baba appears quite extensively. They're saying about a 280 billion realized gain, but you can see here it's this gain here is then offset by a loss. So there's quite, there's this derivative loss here. Look, that offsets the gains. So quite what the game is there, I haven't worked out, but there's something afoot there. And generally what SoftBank did was sell Alibaba at a vast profit over the last few years. So it's been a very nice, you can see it here, the fair value through profit and loss. So the share price is more or less doubled. The derivative is more or less doubled. So yeah, you make of that what you will. But that's SoftBank. So SoftBank also own, I mean, just quickly kind of cover, they also own all manner of very interesting companies. So the whole piece around autonomous driving, the piece around Deutsche Telekom. So these are kind of internet ISPs. So some very interesting, but also just sort of things like Wave, which is autonomous driving, and some of these around robotics. So just basically transferring, moving things around to put them, what I describe in the article as putting them in formation. So I really like SoftBank, I must say. And one of the criticisms I've heard is they say, oh, well, it's very, very heavily indebted. Well, is it? Like, look at this. The debt, I mean, obviously these are very, very large numbers, but total liabilities, so here is 31 trillion. You know, so the total liability is 31 trillion, and of that, 18 are current. So you've got some debt there, for example, and payables. Uh, so, oh, excuse me. Do you know, I've not had hay fever for all my life, and now this year suddenly it's anyway. So so the debt is at about 20% of assets. It's not that high. I was very surprised that people say that it's very indebted, because it kind of isn't particular. At least I didn't think so. The cash flow as well. You can see here there's a lot of stuff going on: proceeds, redemptions, investment. So large numbers going each way. Um, a lot of investment going into AI and just things that are growth areas. So if you're a believer in the future is exciting with technology and progress, then SoftBank's the sort of company that is very interesting. And when you look at the valuation, I mean, that is, I think, a heck of a lot cheaper than the Mag 7, um, personally, but that's just my my opinion. Um, Okay, let's move on. So I talk about SoftBank, and also that it supplies into the Mag 7. I mean, that's the other thing to say, via its ARM holding. And the ARM holding itself is making a profit. So that fair value loss, or that loss, drop in NAV, again, I think that is probably just down to the share price being down in price, whereas the underlying performance of ARM is actually really good. Look at this. The royalty increased, double digit royalty increases, license increases, 25.3% increase in, that's revenue, and that's dollars. So they're chucking off 4 billion in that quarter. So that's 16 billion a year of royalty revenue. And obviously that is a very, very, the gross profit on that's the gross profit margin on that's going to be very, very high. So and then obviously some things like fintechs, and Klarna's going to IPO this year, probably. Revolut's probably not far behind. Don't really know PayPay. um, but again, you can see there's some real clusters forming up of some areas that are hot topic areas. I mean, that's so Rakuten's number two. Rakuten, on the face of it, posts a large loss in the first quarter. You can see it here, minus 61 billion yen, which is about that's about sort of 300 million loss, which obviously is a large loss. But you can see here it's EBITDA profitability for the mobile division is growing. The EBITDA profitability is growing and heading in the right direction. In fact, it became EBITDA profitable in March, the quarter to March 25. And as you can see here, the penetration of cross-selling, upselling to these mobile users, because my understanding of this is the mobile users are kind of like loss leaders anyway. So you've got these uh, 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 cross sells, so you're cross selling to about 1 in 8, and that number's growing. And as you can see here, they're looking to become an AI powerhouse. It's another AI story, and this is 2 or 3. Hence the triple. Marketing productivity. So to apply AI into the marketing that they're doing, to apply AI into their internal systems, but also to provide AI to their clients. So part of the cross-sell, upsell of the mobile clients is to say, hey, we can give you an AI large language model or agent, or a subscription to something like that. And as you can see here, it's this pink loss here of the mobile that is shrinking. I mean, that's down 14.3 billion yen year to year. So So it is improving, and the other divisions are obviously profits are growing. So it all looks pretty good. Sumitomo. I looked at this before and it was kind of a bit pedestrian, I felt. In fact, I thought to myself, well, Berkshire Hathaway, that this is one of the trading houses. I don't know that he has specifically invested to this particular one, but it is one of the large trading houses. So it's the sort of um, share that Warren Buffett has been invested into. And it looked pedestrian when I last looked at it, but obviously, that is a very nice result. So, and you can see they're looking to not looking to grow profits a large amount more in 2025, but they've achieved a really strong result in 2024. Return on equity 12.4, and this 175 is a 45% increase. So that's kind of why I'm saying, like with this one, for example, the Sumitomo, that's that one. It's a price earnings growth of 0.18. I mean, that's just spectacular, and that's that 45.5% growth versus the PE of 8 times. I mean, that is fantastic. I think so anyway. Um, so yeah, anyway, that's Sumitomo. Moving on to GMO number 4. Now this one, since the start of this year, has pretty much tripled in price. This is the share price of GMO. I haven't kind of gone into any great detail on that one. I probably need to do that. But you can see here um, the net profit is pretty flat. So this is the quarter 1 results. So the year on year is flat between the 2 quarters. But we can see here, that internet infrastructure revenue and profit is at record highs. So they give themselves a double tick for that. The finance part of their business has kind of got some challenges. The crypto is doing okay. The online ads is doing okay. So some mixed bag results um, in quarter 1, but pretty solid. And again, the I suppose the way to look at this is that you can see here the revenue growth rate. I mean, okay, yes, the quarter 1 results were a bit pedestrian, but the longer term results are very good. This is why it's tripling in price, is that its service lines have well into double digit growth. So that's kind of the underlying performance and the underlying operating profit, excluding venture capital investment. So again, there's a little bit of, one part of the business that's dragging the rest of it down. So they've hived off the internet security in the current year. So there's a little bit of change there. They're seeing that as a key development area going forwards. And as you can see there, that's growing fast. So it's another exciting area. Let's move on to SBI. So again, record results. So we see record profit up 85%. That this is the PBT is up 99.4%, but the net profit was 85%. So again, this is one where the SBI is on a price earnings growth of 0.08. I mean, it's spectacular, isn't it? That's really strong results. I mean, let's just quickly dive into a few bits and bobs around that. So you can see there the return on equity has grown fast. See, these are the different areas. Now this is a bank, so these are some divisions within their banking group. So you can see here the financial services, asset management record high, crypto. Look at the crypto growth there. That's pretty good. The private equity growing 341% year on year. I mean, it's spectacular, isn't it? Spectacular growth. So and it's this bit here that's the problem child, as you can see. next gen business. So this is the biotech, semiconductor, medical informatics. So it's all the kind of cutting edge stuff, I guess, has not performed so well. But yeah, look at that. That's such a turnaround, isn't it? From a loss to a very large profit, but also 30% growth here, 12% growth here, 150% growth here. So really, really positive. Let's move on to Sony. So Sony is number 6. So earnings are up only 19%, putting this on a price earnings of 20 times. Price earnings growth 1.1. 1.1's obviously slower, but this is Sony. This is a big, big business. And very, very solid results. So you can see here there's increases to the dividend, increases to performance. So again, a pleasing outcome as far as I was concerned. You can see here these most divisions increased at Cyberagent. So Cyberagent is a few things. A blog service, so that it's kind of like like a social media, a very popular social media company in Japan. TV subscription, so it's kind of I call it the Substack dash Roblox dash Tinder dash Netflix. So it's kind of I'm just using some Western companies to kind of provide to give you a picture of who they are, what they are. Because obviously, Cyberagent, you kind of imagine that they do sort of online security and something like Norton's antivirus, and not really at all. They've obviously got a media business, but Cyberagent is a bit of a misleading name. I was bracing myself for learning about internet security and cyber security and all of that fun stuff. And actually, Substacks, Roblox, Tinder, and Netflix is a little bit different to that, let's say. And also very large in anime. If you're a fan of anime, these guys are a major producer of anime, and that's a very popular form of entertainment that's growing very, very popular in India. I was surprised to learn that Japan is doing a very, very strong export into India. And obviously, India is a very rapidly growing market with a lot of people in it. But also, China is another key market for Japan. So 75% of profit was achieved in the first quarter. In the first half. So they're halfway through the year and 3/4 through their target, which pretty good. So that was their budgeted profit for the year. Above target progress. And again, you can see here the net income 31.4%. So that puts it on a price earnings growth of 0.24. So actually, I haven't done this, and I probably should. I mean, if we just say let's take the average of those. Let's take the average of now these ones I've put at 999. That's kind of I mean, technically that's just because they're on losses. So you might sort of want to just put that. Helps if I do that. There we go. Average. I think that should be a 1.1. Thinking about it, rather than a percentage. So that's a price earnings growth of 1.1. So it's, I suppose, yes, you have got some, outliers like this one and this one that drag it down a bit. But yeah, if we take the average of these 7, you're looking at an average price earnings growth of 0.11. I mean, that's just incredible for what should be boring large companies in Japan. These are not. They're large, but they're not boring. At least not boring in terms of, there's the saying, elephants don't gallop. Well, looks like we've got a few gallopers here. Uh, anyway, that's kind of that's that one. Calbee, a little bit more pedestrian on this one. This is one of the ones where yeah, this is the 3.6 that you see in here for the price earnings growth, and it's at a 77% premium. I mean, these basically make snack foods, crisps, that kind of thing, and but solid, growing profits 5%, growing revenue, sales 6.4. And I kind of like looking at these are our products in Korea and in Singapore, Hong Kong. So baked milk rings were kind of the highlight for me. Uh, Never eaten a baked milk ring. Haven't got a clue what that would taste like, but I'm curious to find out. And obviously, they've got all manner of spicy crisps as well, and funny flavors. Takoyaki balls, uh, whatever they might be. But that's just a little screenshot from the Calbee website. So GA Technologies. Now this is a sort of, I said it's kind of a little bit like Rightmove, except it's a right rent. So what I mean by that is, if you were a buy to let person and wanted to buy property to then rent it out, these guys are doing that. And again, some very exciting growth. So you can see here they've got their Renossi business, and then also their Itandi business. So there's sort of different segments, and growing very fast. Obviously, they're covering 7 countries. So they're in Thailand, US, Malaysia, China, Taiwan, Hong Kong, Japan. Um, only 12 years old, and you can see there, that's what's that, £1 billion a year. So they've gone from zero to a billion in pounds, billion turnover. So that's not, yeah, that's a unicorn, isn't it? Is it a unicorn? Yeah, it's a unicorn. Well, it'd be a unicorn if it's valued at £1 billion. So let's look at what it's valued at. So it's valued at, well, its NAV is 100 million. Its market cap is 300 million, 310 million. So it's not a unicorn in the valuation sense. But anyway, it's gone from naught sales to £1 billion of sales annually in 12 years. And you can see there, customer satisfaction #1 for 5 years running, and so on. So this kind of ties together people selling property and people buying property to develop it and rent it out. So yeah, very interesting business, I thought. Unique business model. The nice thing about this is that as it grows and ratchets, obviously the profits grow and ratchet. That on average it would take 80 days or 44 days to kind of match, sort of people to properties. They're doing it in 4 days. So kind of USP. They're able to massively cut down on the amount of time it takes to sell a property. 27 days versus best part of a year. Providing a one-stop shop for I suppose taking out the mortgage, taking out the valuation, the land registry, it's all that fun stuff, isn't it? To bring it all together. So you can see there, creating a market for real estate investment. And actually, it was very interesting because these guys, I'll actually cover this in this article. So there's a second share, or this is actually a fund that I follow and sometimes write about, which is the smaller Japanese. And basically, GA Technologies is also held by them. So it's held by both funds. So I just sort of cover it in this article today. Okay, so that gets us to so that's GA. So that gets us to number 10, which is FANUC. Let's go to FANUC. So FANUC is here. So again, this is a robotics provider. So these don't sort of wax lyrical and show off their presentations are very conservative, but they're very solid. Growing steadily. Net, sales are steady. Income is steady and high. So this isn't a cheap share, but it's a very, very solid share. And these guys do. You can see it here. They've got the robotics. They've got robo machines. So these are kind of like painters, welders. Sort of the robo machines are kind of specific to a task. Service robots is a growing part of their business. And so they've, as you can see here, they've got growth, strong growth actually in China. So China is about a quarter of the business. Europe has compressed. Now, a lot of this is just down to in the past year, the car manufacturers have had some challenges, should we say, in Europe. So that's affected things somewhat. And as you can see here, very, very solid results. Growing results. And actually, I think what was very interesting was just the extent to which their order book. See here, the order book's up 55%, 28%, 12%. Overall, on average, 21.9. So that's consolidated orders. So that was the sales. So the sales are a bit pedestrian. You can see here, weakness in Europe offset by real strong expansion outside of China. So a lot of that is India and Vietnam, and but very strong growth in China, but very, very obviously Europe and America very, very weak sales, and a lot of that is automotive. That I read. So yeah, you can sort of, I think they actually do explain that somewhere in this deck. So yeah, look, I again, a solid share, and then I end with there's two others. MIXI. So MIXI again, you can see profits tripled, tripled year to year. So this is a sports betting company. So they run some sports clubs. They run a sports betting operation. And then again, it's sort of, I mean, the word mixy, it is like a mix of different things. And they've got, yeah, their fingers in quite a number of pies. And I cover them in a prior article, so you can read about those if you like. And then honorable mention to Nintendo. Just mindful of that whole thing with the Switch 2. So the Switch 2 has had really positive reviews. Nintendo are expecting the Switch 2 to turn around their fortunes. The share price had gone up a lot on the expectation, but obviously the thing that's messed things up for Nintendo quite a bit is tariffs. Now, obviously, the Japan delegation are working with the Americans and ironing out a trade deal. But yeah, as it stands, you can see there the results are not terrible. They're not terrible, but and the forecast results obviously they're looking to grow sales very, very strongly, but really net profits not going to grow a great deal. So that I take that to mean that they're going to be investing a lot into the Switch 2 and into the marketing and into just kind of a lot of um, the success that's going to come out of Switch 2 is going to kind of get reinvested back into the business. So that's why that profit there is not as strong as the sales growth. So look, just to kind of bring this to a conclusion, where are we? We're at 39 minutes, so it's a bit faster than normal. I think this is incredibly good share. It's just my opinion. I mean, when you look at it here, like, you wouldn't really know about any of what I've just explained to you. Look at it, like, it obviously it was very badly affected by the Trump Lib Day announcement. The shares, and Softbank particularly went crashing down. If we went and looked at Softbank, for example, Soft Bank, Soft Bank Group. Choose the right one. Group Corp, I think, is the right one. So if we went and looked at year to date, I mean, we can see there that it was at what 8.3 before Trump Day, uh, Lib Day, Lib Day Trump, crashed down from 8.3 to 5.8, and since then has gone back to 7.7. So it's not quite back to where it was before. And obviously here at the start of the year, it was up at 9. So um, when I look at the results don't really reflect the success of SoftBank. Um, I don't think, and there's a lot of skepticism on SoftBank as far as I can see. But you've obviously got to make your own decisions. None of this is investment advice, of course, but I must say I kind of look at the progress that these are making. So they're chucking off really good income. If you strip out the cash, the price earnings is fantastic. Um, Quite a lot of these, the price earnings growth is absolutely off the scale. You can buy this at a discount as well. This is the other thing, that 12.3% discount is the fact that the NAV is the pink line up there and the share price is the blue line down there, the 759. That number there is that number there. Whereas the NAV, the net asset value of the holdings it holds, SoftBank and Nintendo and Sony and so on, are worth £8.57 a share. So to be able to buy these fast growing shares at a at a reasonably big discount, 12%, it's not historically a large discount. You can see it here. It sort of has been that for a long while. So I'm not saying that discount's going to suddenly disappear, but you can see there are times that it certainly drops away to single digits, to 5 or 6% discount at times. And yeah, I guess if this obviously this is the 1 year performance and it's pretty flat. It hasn't really 857 from 837. Um, and if you look at it longer term, I mean, you can see once this thing gets on a run, that increased from 730 to 1078 in what would that be in 6 months? In no 9 months. So in 6 to 9 months that this can go shooting up by 50%. And I think yeah, and you can see there's other periods here. So I mean, if you bought it back here at 2016 and then sold it here at 2018, £8 and £4, so you'd have doubled your money in 2 years. So there's the knack here is to kind of catch it when it's on its way up. The thing that I noticed now, obviously, I'm not able to go through or haven't gone through every holding, and to be fair, I don't know every holding or definitively know every holding because they only disclose the top 10. But for the ones that I have looked at, the top 10 that I've looked at, I think that this is going to potentially be heading, upwards. I mean, because the profits are certainly going upwards. The growth is there. The earnings growth is there. The profitability is there. The cash is there. These are sort of global brands. I mean, everybody knows Sony. Probably most of you know Calbee. You probably know them for the Seabrooks crisps in the UK. On the assumption that you're a UK viewer watching this. So, anyway, none of this is investment advice. This is just me looking at an arguably unloved share that's kind of not really going anywhere, and I'm looking at it going, well, it looks like it's going to go somewhere, but who knows? None of these things are certain. But it's interesting because the Japanese economy, when you look at the performance of those companies, uh, it looks like the Japanese economy is far stronger than perhaps people are giving it credit for. Now, the other thing that I would just quickly end on is just the exchange rate. If we go and visit McDonald's, not literally, but just figuratively, this is McDonald's Japan. Oh, no, it's not. Do you want to buy McDonald's Japan? Because it's for sale, apparently. Let me, uh, yeah, McDonald's Japan. English menu for your convenience. Yeah, English menu would be good. But look, if you go and buy a McDonald's, go and buy a Big Mac meal. They call it a Big Mac set. So you're buying a Big Mac set for 750 yen. 750 yen. Okay. Today's exchange rate is 194. You're buying a Big Mac meal for £3.86p. Now, in Britain, I think the Big Mac meal is about £7.50. I don't know that for sure. I don't buy Big Macs particularly. Try not to anyway. Haven't bought one for a long, long time, but that's another story. But yeah, look, £3.86 suggests to me that the exchange rate is completely bonkers. So the other thing to say is, like, on the basis that the yen is maybe as much as 50 to 100% overvalued. The other thing that would happen here is, obviously, if the yen moved from 194 to 100, this NAV would double, would double. Because the translation of the shares would halve. In GBP terms, the shares would be worth twice as much. So that's the other thing that I think is going on here, is that you're able to buy, just like you can buy a Big Mac cheaply, you can also buy Softbank cheaply and Sony cheaply, incredibly cheaply. I mean, 194. Like, could the Big Mac get cheaper than £3.86? Could you pay £2 for a Big Mac? I mean, at the end of the day, Japan, it costs just as much to make, to obviously get the burgers and the buns and the energy and all the stuff that goes into making a hamburger for people. So, like, if people say, oh well, it could continue to go up higher, well, no, not really. I don't think so. Interest rates is the other thing. UK interest rates are going down. Japan interest rates are going up. So that means that uh, the attractiveness of the pound goes down and the attractiveness of the yen goes up, which means that the exchange rate is probably going to go down. The yen will strengthen in the coming year. So yeah, look, that's another reason to really like this. Apart from the fact that they're making record profits, very exciting shares in my opinion. But also that the exchange rate is in your favour. So, and the final thing to say, keep saying final thing. The final thing to say is just the rate at which they're paying back or buying back their shares. I mean, look, this was this was yesterday, so they bought back 40,000 shares at £7 each. So a little bit of maths, 40,000 at £7.50 each. That's about £300,000 of shares. So if they're doing that every day, okay, and you can see, well, yeah, they are. I mean, let's just quickly go into this one. £30,000. That's about £220,000 worth of shares. So that's £500,000 of shares in 2 days. Okay. Um, I did the maths on this, and I must admit, I don't think I've updated this number, but you can see here, like, as at the 18th of the 2nd, there was 81 million shares. As at a year before, it was 89 million. I mean, let's quickly do this. 17/05/25. Let's change this number to whatever it is. Let's just go back in and let's just see what it is. So it's 79,211,000. Da di da di da. So you can see that number there has dropped by 500,000 shares. So you can see, I'll just tidy that up. But you can see that, like, even since the last article, which was 1 month ago, they've bought back 500,000 shares at about £7.50 each. That's like nearly £4 million worth of shares. So what will happen is, obviously, because they're buying them back at a discount, is that increases the NAV. The people with the shares left over, those shares are worth more. So that's another thing to like. That is going to be the final thing to like. Yeah, I hope you enjoyed this video. This is about ticker BGFD, London listed. Investment trust. If you like these videos and my articles, which are at theoakbloke.substack.com, I would encourage you to support Emmaus. Emmaus is here on my homepage, help Emmaus, and yeah, just give now here. There's 112. Oops, 112 that have. Don't worry, you don't need to connect your Fitbit or a Strava, whatever that might be. Just yeah, look, if you like what you see, what you read, I don't ask for any money for myself. I just ask you to support these guys because we're making a big difference. These guys help homeless people, but don't just give them a handout. They give them a hand up. Put a roof over their heads, but the people that have the roof over their heads then work in the businesses of Emmaus to give something back as well. So it's kind of helping them rebuild their lives. What could be better than that? Like, no matter how hard-hearted you are, just do this. Give to this. This is a really worthy cause. So just really encourage you to do that. Since you're still watching this and you've put up with me for 51 minutes, you must like what you're listening to. So anyway, Oak Bloke signing off. Cheerio for now. Cheerio.